Hello. Um, this video is just to give explanation on some of the trade we took last week, especially this Euro USD. Right. I don't intend to make this particular video a long one. All right. So let's go straight into it. Now, with this Euro USD, from the onset, we knew the market was in an uptrend, right? So 1 hour strong uptrend. Very strong uptrend here. So this was a setup. This is what we sent to the community, right? That a low resistance liquidity here, and then a high resistance liquidity. And what we said was that in this lesson, we said that for a high to be considered as low resistance liquidity, it should take out a significant low or a significant demand zone. So here we could see that the market was in an uptrend. We have a higher high, a higher low, higher high, higher low, higher high, right? Higher low, and then a higher high. So this high took liquidity here and formed this. So this is a high resistance liquidity, and then also an SC candle, a sponsored candle, because what smart money bought into this candle before dropping the market. So this here, an induction happened, right? So now after that induction, there was a BMS market. There was a break of structure here, BMS here. So definitely this could have been a good sell. Okay, so you could have sold here, taking your profit here, and maybe somewhere around this block, right? So, but that is not what we want to talk about. We want to talk about the reason for this, right? Why is it that market didn't trade above this level? Okay, so in a liquidity video, we talked about what a low resistance, high resistance liquidity. So we said that when the market creates a low before creating a high, that high will be considered as a low resistance liquidity. Okay, so usually you want to look for trade between the low resistance liquidity and the high resistance liquidity. So again, we said that market will break the low resistance liquidity on the first attempt. On the high resistance liquidity, to be able to break it, there should be some form of resistance, a pullback before breaking it, right? So this definitely makes it a good area to look for a trade. Okay, so now let's go to the chart. Okay, so I've already said that the market was in an uptrend. Okay, and there was higher high, higher low, higher high, higher lows, higher high. And then here we have a lower low because market broke structure to the downside. So we have a BMS here. Okay, and then so this becomes a low resistance liquidity. The next thing I want to look at is what momentum. Okay, well, when picking a trade, you should also consider momentum and then consider volume. So with this, if you are measuring momentum on this pullback, you can see that it took a shorter time from this high, okay, to this low. It took 17 bars. So there were 17 candles between this high and this low. So this one moved faster if you compare it to what this particular level from this same low to this high. It took about 41 candles for price to cover the same space, which means that this area or this move is not the main move, and the main move was this particular downtrend. Momentum is to the downside because this one moved faster than this. Okay, now look at the way the candles, the candles are packed together. Okay, this is a form of compression. Usually compression is in between two trend lines, so we have a channel, right? This is compression. Okay, so it's compression also explains how do you call it, momentum. All right, now on this down move, okay, we saw that volume was increasing. Just look from here to this low, we saw increasing volume. Volume was increasing, meaning that there was more money to the downside. The smart money was participating in this down move, okay. But for this up move, volume was dried. It was drying up, okay, meaning that, okay, smart money is not participating in this particular, no, they are not participating because there's no active participation of smart money, but the price is moving up. So this is not supported, okay. So this gives you the impression that the market is coming to fall. All right. There are other aspects that I may not be speaking about. So now this tells you that you can easily trade, put your sell limit at this level, and then your stop loss at the high resistance liquidity, if only you believe that this is a good risk, right? So for instance, from here to here, we have about 5 pips, I think so. 5, yes, 5 pips or 6 pips. So let's say 5.7 pips. That's the risk. If it's too big for you, then you have to wait for price to trade inside. And the point is that sometimes you wait and price moves and then doesn't give you the second chance. But luckily, this is a trade that gives a lot of chances, right? So let me zoom into the smaller time frame and see if you could have other opportunities. Right. So on a 5-minute chart, again, this is a trend that we're referring to as what? Compression that is not supported by volume. But on a lower time frame, you could see that yes, there were volume increasing and then decreasing at the same time. Okay, so we have right, okay, higher highs, higher low, higher highs, higher lows, higher highs, okay, higher high, higher low, market traded below this low, okay, higher high, higher low, higher high, higher low, and that was the structure, okay, right. Now, when we got here, market created a higher high, a higher low, a higher high, and a lower low, okay, a lower low. Now, which means that there was a BMS, a break of structure, BMS. There was a BMS here, okay. But now, again, for this BMS, there was no strength in terms of volume. All right, there was no strength in terms of volume. So one might have ignored it, but the reason why you could not ignore it is that if you compare momentum again from this high, okay, momentum from this high to the lowest low, it was 8 bars, 8 candles. So it took 8 candles for price to move from this high to this lower low, right? How many candles did it take for price to move back into that same area or above that area? 44 candles, right? So now you could say that this is a good point to sell. Okay, now you could have taken a sell here, and then hold, right? So for instance, again, at this point, this is a major BMS because if you consider this whole thing as one high, you can see that price created a higher high and then broke structure. So this is a BMS to the downside again. This was a minor one. Okay. And this is a major BMS. A major BMS, right? So price, we broke structure here and there was a return. Okay, so this could have been an entry, right, around this this point of interest. Okay, this supply zone, right? You could have taken a trade here and then taking your profit around this level, or better still, down, I think anywhere below this level, right? But now, again, after market broke structure to the downside and went in, it came back. And then again, momentum was a factor, right? It took longer time for price to go up than when it was coming down. So here, from this level to this level, took 21 bars, right? I believe it took more than 21 bars when price was going up. Okay, it took 32 or 31 bars, right? So momentum was still on the downside. Now, here we can see that this is a significant low because this is a lower low, a higher low, higher high, higher low, higher high, and lower low. So this is a significant one. Price broke it before forming this high. So this high becomes what? A low resistance liquidity. Low resistance liquidity. Okay. And this becomes a high resistance liquidity. Right. So again, in between this high resistance liquidity and this low resistance liquidity could have been your entry, right? So you could say your entry is here, your stop loss above this, right? So you have a 4.5 pip stop loss. Okay, and then your take profit will be down here. Okay, so for me, I was expecting to see price trade below this low. I was expecting to see price trade below this low. Okay, so during this time of the day, it was too late for me to hold a trade, so I closed the trade, because if by 5 p.m. the market hasn't traded below this low, then I don't think we need to trade, so I closed the trade. So this is it. This is the reason why we took the trade. Momentum, right, is important. Volume is important. But breaking market structure is important, and the understanding of what high resistance and low resistance liquidity is important. I'll end the video here. Thank you very much, guys. Subscribe to our YouTube channels for more videos. Thank you. And then please share the videos. Please share.